TOD-AI. Market news. The characters are fictitious and do not correspond to real people. Invest at your own discretion. Script and production by Edgar Garcia de Pereda. Hola. Today we will look at the real value of Bitcoin and Ethereum. To do this we will see Bitcoin network facts, Ethereum network basics and data, opinions on what the real value of Bitcoin and Ether could be. Facts about Bitcoin. We have already seen in the previous episode of Bitcoin and the success it has had as a use case. The various metrics on Bitcoin trading continue to be positive, as we will analyze below. The Bitcoin system is based on the fact that several actors on a voluntary basis offer their computing power to process transactions and store transaction history in exchange for the ability to obtain Bitcoins as a reward, as set out in the proof of work consensus algorithm. The first to solve the proof of work processes the next block and gets the reward. The total computation of the network is known as hash rate, and as shown in the following chart continues to rise, indicating that the state of the Bitcoin network is healthy and offers a lot of security. Imagine creating a system whose contributors grow and provide the infrastructure needed to make it work, because they trust the value it delivers. Bitcoin is a success story in that regard. The main use of Bitcoin is to store value. Having a hard digital asset, easily transferable and interchangeable without the custody of a third party. If we look at the evolution of accounts with at least $1 of stored value in comparison to the evolution of Internet users, we found quite a lot of similarity. Bitcoin 15 years ago in January 2024, just as the number of Internet users began to grow exponentially as shown in the graph on the left. The following Bitcoin use cases are the use as a means of payment and short-term investment. If we analyze the evolution of active accounts in the Bitcoin network every day, graph on the left, we see that the increase in use is slowing down. This is because Bitcoin technologically does not allow for a large number of transactions to be used on a large scale as means of payment. Due to the above, a new second-level network called Lightning has been developed, which does allow the massive use of Bitcoin as a means of payment and is already a success as well. The community has already created the necessary infrastructure and number of nodes in the Lightning network to allow 25% of the total number of Bitcoins to be used, graph on the right. The number of businesses that accept it, as well as the number of users that use it, continues to grow, and this is where there can be exponential growth. Using Lightning Network is cheaper than Visa or MasterCard. In addition, is beginning to be backed by large entities such as Santander, by the number of transactions it can allow per second. The Bitcoin community has also developed new use cases to implement on the Bitcoin network, as that of the NFTs, as we saw in the previous episode. This generates other uses of the Bitcoin network as demonstrated in the graph indicating the average size of each block. The additional information stored for NFTs is the cause of this increase, started in early 2023. The basics of the Ethereum network. Ethereum was born in 2015 under the leadership of Vitalik Buterin, as a decentralized ecosystem based on a blockchain different from Bitcoin, designed to be able to execute smart contracts. These are pieces of self-executing computational code based on rules that are reflected in the code itself. This allows the creation of decentralized organizations where their members can exercise votes on the rules to be applied, but the execution of them is carried out by the implemented machine code, avoiding human corruption. Ethereum uses the Ether token for the payment of the computational cost it entails, also known as gas. There are numerous use cases of decentralized applications that can be implemented on Ethereum. All are based on a more transparent and democratic governance, the elimination of costs and benefits of intermediaries, greater distribution in production and in the revenues associated with it, and greater security, among others. Examples of use cases that can be implemented on Ethereum are: 1. Tokenization of assets. To have a representation in a unique and transferable digital token on some physical asset or not. In the case that it is not interchangeable, such as a work of art, then it is an NFT. 2. Decentralized finance, DeFi. Here we talk about loans, deposits, investments, means of payment, etc. 3. Identity systems. It allows the management of identities, so that the user controls his information and who consumes it, not an intermediary. This improves privacy management and is also the basis for the possibility of creating Web3 applications. 4. Web3 applications. Enable users to participate in governance and have a greater share of benefits by eliminating intermediaries or owners of a system. On this basis, use cases arise such as: 5. Social networks. Users can earn tokens for the content that they publish. 6. Games and virtual worlds. Metaverse. Users can create assets, buy them, rent them, etc. within a virtual world. 7. Digital ads. Publicists, owners and consumers interact without intermediaries to manage the advertising that is displayed, to whom it is shown and how the money paid by advertisers is distributed. 8. Shared production. For example, several agents share the energy they produce and earn tokens that are paid for by consumers. Although, the Bitcoin community has also created Level 2 networks that allow this type of use cases, e.g. stacks, Ethereum has been postulated as the leader for them. Ethereum network data. Although all these possibilities have generated a lot of enthusiasm, Ethereum has had to evolve to allow a very large volume of transactions, and that does not involve a high energy cost. Although many of the new features have already been implemented, they will not all be completed until 2024. The use of Tier 2 networks has also come to Ethereum to improve its functionality, and this is important to understand the data also in Ethereum. The first thing we are going to see is the support of the community to provide the necessary infrastructure to process transactions and smart contracts. The top chart in the screen shows the computing power while Ethereum was running on the proof-of-work consensus algorithm, same as Bitcoin, and the bottom chart shows the amount of Ether stored as proof of stake due to Ethereum switching to this consensus algorithm. The data reflects the total success of Ethereum in this regard. If we look at the number of accounts created in Ethereum, growth is also very high. By the moment, is a linear increase, without seeing an exponential increase yet. In terms of the number of transactions carried out per day, also shows an increase, reflecting increased adoption of Ethereum. In terms of use cases, evolution of total capitalization of decentralized finance projects, where Ethereum is the first in the ranking, shows growth, although it has fallen from its highs. Regarding the NFTs, there was also an explosion, which has now been reduced, both in the value of the NFTs and in the number of transactions, according to Defalama data. Despite the decline in the use of certain assets, developers continue to increase their activity, which indicates that new applications are going to be implemented, and that all of the use cases mentioned will be enhanced. This can be seen in the download chart of the packages needed to encode the applications we get from the source NPM trends. In short, to date, there is a high degree of adoption with the potential to grow significantly. Both infrastructure support, as well as user interest, as the pace in new developments, point to the increased importance of both Bitcoin and Ethereum and Web3 systems in general. Let's now analyze what the value of Bitcoin and Ethereum could be. Under no circumstances, we are recommending to buy or sell.
I believe that with the data we have seen, Bitcoin and Ethereum adoption forecasts are on track to be met. If we look at the chart of Amazon's stock performance, the dot-com bubble period saw the dot-com bubble rise sharply, but then fell by 90 to return to its previous value, as shown in the graph below. However, when the exponential growth in the use of internet began, Amazon was very well positioned and climbed to much higher heights. Even in the graph above showing the complete history, the year 2000 increase is hardly noticeable. With this analogy, we could see Bitcoin values above $600,000 and Ether above $40,000. It is necessary to think, in addition, that Amazon's primary source of revenue is cloud computing, something similar to what the Ethereum token represents. In my opinion, the current value of Bitcoin and Ethereum is below their potential, and long-term, we will see those heights much higher.
Bitcoin and Ethereum cryptocurrencies are assets that have been created new, and that they should be viewed differently. Bitcoin is a digital asset limited in quantity, whose money supply is growing, but to a lesser extent after each halving, as shown in the graph above. Ethereum, for its part, represents the computational power in an ecosystem with many services, and whose money supply has stopped growing, to move to a very smooth decline. When you create new assets of high value and their value rises, the relative value of others decreases. In a world where many assets are becoming manufactured with little effort, this type of digital tokens on the other hand are in high demand and cause a transfer of value, of the most traditional products that are now simple to manufacture, to these others. I believe that we are still at an early stage of this value transfer, and that it will happen even faster than it did in the case of Amazon.
For Ethereum, it must be taken into account that there will be an increasing number of computational offerings with fewer and fewer tokens in existence, so that the price of each computer unit will be lower in ethers. This will result in fewer ethers equaling more dollars, with the same relative value. If Ethereum usage increases, the value of Ether will explode. With all of the use cases it can support and its technology, I see it as having even more potential than Bitcoin. One thing that impresses me about the invention of Bitcoin is that halving occurs coinciding with changes in the economic cycle. If in 2024 we enter a recessionary cycle with rate cuts, halving will again coincide with the change. For me, both influence the upward cycles that Bitcoin has had. In the graph, we can see the vertical red lines indicating the halving. The orange line corresponds to the existing Bitcoins, and the blue line is the value of Bitcoin on a logarithmic scale, which visually best represents the historical evolution of price. The next halving is scheduled for March 2024.
I believe Ethereum may also suffer from competition from other emerging ecosystems, as well as a more centralized government, with Vitalik Buterin as a strong leader. In this regard, I see Bitcoin as more secure. Regarding the cycles, between now and the next halving, I think we will continue with a low volume of transactions, which will lead to price volatility. Changes that may now occur with low transaction volumes do not seem significant to me, and I would not rely on them. The graph shows that the current volume is low, especially in view of the growing number of users, that most of them are storing for longer term. Regulation is also very important, and we will see if there are no obstacles to the smooth use of Bitcoin and Ethereum, with all the possibilities we have discussed.
Thank you very much. We will continue to report on crypto in this channel. You can consult references in the comments. We welcome your own comments. Subscribe for more information on truth-chasing economics.